Hey guys, it's Joe DeMarco here, not your average Joe. It's been a while since I've been doing some social media stuff, but I thought right now would be a great time to talk about a few things. So what I did was I put together this video because I think it's really important uh, to understand what's going on in the market right now because there's so much confusion in the mortgage and real estate market with interest rates, with the Fed, how the Fed interacts with actual long-term interest rates, et cetera, et cetera. So I've been getting tons and tons of questions about it. And I think it's really important that we do a little education here about, really what's going on. So you may or may not know over the last 2 weeks, interest rates have significantly moved upwards. Okay. And that movement has gone almost, I would say, probably one full percentage point in rate over the past 14-day time frame. So, what I like to do here is I like to frame this for you and show you where we were a couple of weeks ago, where we are right now, and really where does it look like that we're headed because things are changing and they're changing at a really rapid pace. So I'm going to go ahead and share my screen here with you, and I really want to show you some important information. So let me go ahead and share the screen with you. Share. All right. And hopefully, you're going to be able to take a look at this. Okay. So, first and foremost, this is a mortgage backed securities chart. Okay. And each one of these little ticks here represent 1 day in the movement of interest rates. Now, this chart has what's called an inverse relationship, which means that as these little ticks show as they're going down, 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 what is happening? Interest rates are going up, 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 up. Okay. So as you can see here, guys, from basically December, 29th or so, and then right before the new year, we have had a downward trend with mortgage-backed securities being traded each and every day. And where we started here at about 103.5 and we've ended at 101.50. That's roughly about that is 200 basis points in movement. And what 200 basis points of movement does is it moves that interest rate at roughly about 1%. Okay. So we're moving down pretty quickly. As you can see, we did get a little bit of movement back here the last couple of days. But I still feel like there's no support down here, and I feel like we're still gonna trend downward. Okay. So you can definitely see that there is movement here in the market. This isn't stuff people are just telling you, hey, rates are going up. Why are they going up? Well, you can see it here. They're going up. Now, with all that being said, I still, been getting a lot of questions around, I've talked to an online lender, I've talked to XYZ mortgage company, I've talked to my mortgage person last week, and they told me I can get rates still at 2.625. And guys, just because interest rates are going up doesn't mean that you can't get a lower rate. But what people don't talk about is the cost uh, associated with getting a lower rate. So what I'm going to show you here is this is my engine I use to go ahead and price out loans. And what you're going to see here is I'm going to price out a $400,000 loan, 20% down, $500,000 purchase price, 80% loan to value, 20% down. And I'm going to go ahead and hit search. And what you are going to see here are the Fannie Mae and Freddie Mac interest rates for exactly what they are today and where they are trading. So this is a problem with our industry and the communication. So if you could see here, guys, here's the rates available. I use Fannie Mae. These are the rates directly from Fannie Mae. As you can see today, I could tell somebody that I can offer you 2.25% today on that $400,000 loan. But what most people fail to mention to other people when they're talking to them is the cost associated with getting 225 or 2.25%. It's going to cost you $36,652 to get that rate. Now, we all know nobody would ever do that. It would make no sense, right? So as you look, as these coupons or these interest rates go up, the cost associated with getting that rate goes down. So when we talk about market interest rates, or when people say market interest rates, we're talking about rates that are closer to costing 1% to no percent, to zero, right? No points. 1 point to no points. So on that $400,000 loan, you're looking at current market today is somewhere with 1 point around 3.875. Okay. And then with no points, you're probably closer to 4.125, 4.25. That is the real market with Fannie Mae interest rates today. Okay. That's the real deal. So be very careful when you talk to somebody, especially somebody that you don't know, and you're just calling and you're asking for what's the best interest rate I can get, because that person more than likely is going to tell you, well, the best interest rate available is 2.25. Until you actually get into the transaction with them, they are not going to tell you it's going to cost you $36,000. So if somebody's giving you interest rates that just sound too good to be true, guys, it probably is. Okay. So again, you're looking at today's rates costing a point, market rate around 3.875 today, and possibly with no points, 4.125, 4.25. We're floating somewhere in between that. So I want to show you how that relates to a mortgage today. Okay. So what I did here is I put together this chart here. Let me see if I can move it over a little bit. Let me just move it over to here. All right. So what I showed you today here is I showed you where interest rates were about 1 month ago, right? So interest rates were probably floating right around 2.99 or 3% 1 month ago. $500,000 purchase price, $400,000 loan amount. You were looking at a principal and interest payment of around $1,684. Today, that same $500,000 loan, $400,000 loan amount, as I showed you, right around 3.875, you are looking at a payment of around $1,880 principal and interest. So you can see the difference in that payment just from a month ago. And then where I think we're headed based on the market now, I don't have a crystal ball here on my desk, but based on the data that's provided to me and looking at these charts that I just showed you and talking to other people, I feel that we are headed for a little bit higher interest rates. When are those rates going to hit? I don't know. They could be next week. They could be a month from now. But I think we're headed somewhere around 4 3/8 within the next month, definitely. So on that same loan right now, you're looking at $1,997. So there's a significant difference between where we were a month ago and where we're headed. And the reason I share this with you is because if you've currently been in the market for a home and you're looking at a specific price range, you might want to go back and reevaluate your numbers based on maybe where we're going if you don't think you're going to be in the market or find something anytime soon, just to make sure that it still fits your budget, and more importantly, that you still qualify. Because even though you may have a pre-approval in your hand, your mortgage guy might not be thinking about you right now and saying, hey, interest rates are going up. We might want to, look at pre-qualifying you based on future interest rates, just in case you do find something and all of a sudden you find out you can't qualify. Okay. So guys, that's a little bit of information, a little bit of tidbits for today on the current market and where I think we're going. Guys, certainly if you ever have any questions or you're in the market to do some mortgage shopping, or you just have questions in general, please feel free to reach out to me. You guys know where to find me. Facebook, you know my cell phone number. Shoot me a text, shoot me an email. Any way you can get a hold of me, I'm here to help, happy to help, and want to help. So thanks for listening, guys. And this is Joe DeMarco, not your average Joe. We'll talk to you guys soon.